Hey, everybody. Welcome back to episode 60 of The Real Deal Pod with Allister and Geoff. Happy last day of school, everybody. It's graduations going on. The kids are getting out today. The parents are all taking vacation and everybody's getting out of the city to go and start enjoying those summer holidays. We are so happy, though, that you guys are stopping and sitting with us to listen to us speak on for the next little bit, to teach you some stuff and to give you some great advice. Geoff, my man, how you doing? What's new? What's cracking?
Yeah, first day of summer holidays. I didn't realize that was actually the case because my kids are fully grown, and I remember, man, the first day of summer for me was just the happiest day of the next best thing to Christmas.
Right?
But I think it was probably my mother's worst nightmare.
It's
It,
always the parents'
at,
worst
at the
because now
same.
their job gets harder because they gotta handle us. They don't have the school to pawn us off on for 8 hours or whatever, 7 hours we went to school.
But as the summer went on, I was always eager to get back to school because I got bored, right?
Yes.
So,
Last 2 weeks. The last 2 weeks before school started, I always felt that all of us were so anxious just to get back to school because, yeah, you run out of things to do.
yeah. It's like
Yeah,
retirement.
it is, man. Right? Yeah.
Now I know now I know why people say when you retire, you have to have a good, strong community around you and hobbies,
And
right?
hobbies. Yeah.
And if you don't have those hobbies,
Yeah.
you're
Because that first month break is great. But then it's like, now what?
yeah.
Right?
Yeah.
Yeah, for me, we had my daughter's graduation yesterday. So she graduated grade 7. It was the big one. I was telling my wife, it was when I watched it, when I looked at it, it was sadly, and I made my wife cry when I said it. It was the last time I said I think I'm going to see her as an innocent child because it was something just crazy watching the graduation, right? You see all the girls and they're all dressed up trying to be grown up, they got their dresses on. And then you see all the boys, right? And they're all dressed in black pants and a white shirt. And they're all like, this is good as you're going to get. Why didn't you just let me wear my t-shirt and jeans or my t-shirt and track pants, mom? Right? So you can see the dichotomy where the girls aren't dressing up for the guys aren't dressing up for the girls. It's not this big thing, right? And now we're going into the next chapter, ending that chapter. We lost the innocence. And so my wife told me after that to stop talking
Yeah.
because I was going to make her cry more.
Yeah.
So I had to shut up. So that's how I know it's the last day of school, because none of my kids, it's the last day of school. But yeah, that's what was my yesterday graduation, man. It was good. It was fun to see. It was fun to watch.
Nice. Nice.
Yeah, yeah.
Well, I
But
have
now
a
high school starts, and that's the crazy part. That's the crazy part. That's the rough part,
yeah,
right?
I think when I reflect back on my boys, that grade 10, I know yours is just going in grade 8, but that grade 10 seems to be that transitional year. So
Well, that's it. So our oldest, he's in grade going into grade 11, right? So he's in grade 10 now, going into grade 11. That's the part because he just got his learners, right? So he just went and did the knowledge test, just got the learners. So that's the part with my wife now. She's dealing with that one, right? With that transition. And like you just said, grade 10, now grade 11 next year. Grade 12 is now right around the corner,
yeah.
right? And then now the graduation of the littlest one, now going into high school. She's not. It's been a rough couple of days for that lady.
For your wife.
Oh yeah, she's had a rough time.
Yeah.
Me, I've just been enjoying the ride.
Well,
Yeah.
I hope she's not listening to this, but you know what?
Oh
That's
no, no, no. She listens. She hears in the background everything we talk about. I'm going to take a beating when we leave this pod. I might just keep us going way past our time limit just to keep myself alive.
just keep talking. Just keep
Right?
talking.
All right, man. Well, let's get into it because I got a great did you know? I think you're going to love it, Geoff. So, did you know, Geoff, that Vancouver topped another list.
Right.
No, it's not the most polite drivers, nor is it the best brunch with a view. Nope, we are officially once again the most expensive two-bedroom asking rents in Canada.
Wow. What is a two-bedroom in Vancouver going for these days?
So, according to our friends at StatsCan, the average asking rent for a two-bedroom in Vancouver is now $3,170 a month.
Wow.
Yeah, that's the monthly cost of living in a 600 square foot apology with drywall,
Hmm.
right? And get this. So that's actually down from $3,440 in Q1 of last year. So, yes, we've gone from sell a kidney to maybe just a portion of your liver, right?
Yeah.
So, yeah. So, okay. So, meanwhile, Toronto's sitting at what was it, $2,690, which is down from 2,850, and Victoria's basically neck and neck at 2,680. So there we have it. BC now is the Coachella of rental pricing. Exclusive, expensive, and somehow still sold out,
Yeah. And
right?
and you'll have a municipality or a government that says, "Hey, you know what? We are doing what we said we're going to do. We are going to create affordable housing. Just take a look at the stats from this year to last year. Your rents are now down."
Well, listen
And
to this.
as you
Okay.
dig deeper into that wormhole, it's still $3,100 for a two-bedroom, 600 square foot condo.
Okay, well, listen to this. So that's what I was going to say. So if you're thinking it's got to go down, hold on to your optimism because Vancouver's average two-bedroom rent is up 27.3% since 2019.
Wow.
Yeah, dude, that's not inflation. That's extortion with a view.
So it's up 22% in the last 6 years,
27.3
but it's down from the last year.
from last year.
Right. Yeah.
Yeah. So let's that's why I say like let's not jump for joy. We're down from last year. We're up 27.3%. And we talked about last pod how they basically deemed that the affordable housing number is going to be ran off of 2019 numbers, right?
Well, and that's what I always say is that, a lot of us, I'm guilty of this, is we just listen to what is being said. And the more important part of the story is, well, okay, this is as of yesterday, but how about the days before or
Right.
years before? I always say people always quote the Bible, right?
Yeah.
People always will quote the Bible, but they're quoting what they want to quote, but don't understand what all that messaging was said before that verse was.
Right. They cherry pick. Right. Yes.
So yeah, I think I I myself and I encourage others, we always have to be really, really careful to what we hear on the forefront, but also understand, okay, well, this is great. It's down an X amount, but how about the last 5 years? And that's what a lot of news media won't tell you.
No, that's what they refuse to tell you is that 27.3% higher in the past 6 years. Like that's insanity how
Yeah,
much
a
it's
lot.
grown. So it got me to thinking, Jeff, because I remember I was talking with a client and we were just running over some numbers with their that their lender had given them. And we were looking in Burquitlam, right? And I had come to the realization that the average rent in Burquitlam was higher than what their mortgage would be.
What are you calling Burquitlam or Coquitlam?
Burquitlam.
So
It's Burnaby
explain.
Coquitlam.
Okay, I'm like,
Yeah, it's the
what?
border.
Is
Burquitlam.
he meaning to say Coquitlam?
No, Burquitlam. It
What
is.
do you
It's
mean
Burquitlam.
Coquitlam?
Yeah, it's
Okay.
Burquitlam. Yeah,
Well,
Burquitlam.
well, why
But
don't we always say, why don't you break that into a language we understand? What is
it's a
Burquitlam?
it's
Because
a
I've never
border.
heard
It's
of
the
that
borders
before.
of Burnaby and Coquitlam.
Okay,
Yeah,
Burquitlam. Okay.
yeah. So yeah. So, but the rent there was higher than what their mortgage would have been.
Yeah.
And so, and then I started looking, and I based it off of just an easy like 4.5, because we say what you always say give a rate range, and I know the range is anywhere between what 4.04 to 5 and some 5 and change, right? So I just kind of looked, okay, 4.5% mortgage, right? If you're a first time buyer, 4.5%. The average condo in Langley, let's say, is 532,000 for a 2 bedroom, 2 bathroom, right? So I put 550 to make sure we got a good one, right? And I believe, and that's with 5% down on a 30-year amortization, and it was 2732
Yeah.
was your monthly mortgage payment. The average rent in Langley is 2,700 for a 2 and 2.
Right.
So we are now at a place again where it is absolutely advantageous, going back to what we say in terms of what ownership looks to your financial future, right? Why would you not buy when your mortgage is pretty much the same as your rent? It's not skewed anymore. I mean, you could have argued over the past couple of years, right, that we saw the rate increases. You could have argued that it might have been more advantageous to rent because the rates were so much higher.
Yeah.
Right. But now with the drops that we've had, we've gotten to a point where it's more advantageous again to own than to rent because it's now flat pretty much.
I
And
think
I
it's
don't.
I think it's always been advantageous to own.
No, it always has. Yeah, no. What I say, I mean, it always has. But you could always make the argument and then say, yeah, okay, from your affordability,
Yeah.
right now it does not make sense because your mortgage will be much higher than what your rent is, and that's going to it's going to upset your apple cart,
Yeah.
right? That it just doesn't make sense for you to own right now, right? But now we've gotten to a place where when you're flat, it absolutely makes sense.
Yeah.
And especially like we said, if you're 30 years old, 35 years old, and you own a property, you're worth $440,000, $444,000. And if you don't, you're worth $40,000.
Yeah.
Right? So right there now, it just makes sense. And that's something I don't think that we've been talking about enough lately.
Well, and also to that stat, when you're 60,
Right. We talked about that. 1.4 million to $11,900. That's the one I will never let people forget. 1.4 million to $11,900.
if you're a homeowner.
If you're a homeowner,
Yeah.
to a non-homeowner.
I've been working on some files up in Kitimat.
Mm.
And up in Kitimat, like you have the LNG plant, you have a lot of people making a lot of money, Allister. Like I'm talking these guys up there and girls, they're making mid to low 600s, even
Yeah.
some high 600s.
Mm-hmm.
And again, also keep in mind, up in Kitimat, the housing isn't crazy. I just worked on a file, a brand new detached home, 685,000, 4 bedrooms and
There you
change,
go.
on a 10,000 square foot lot, right?
Right.
A beautiful house. The problem that I think we will see and we continue to see, and I'm just using these files that we worked on, is that the inability to save, the inability to save a down payment.
Right.
I'm blown away when I see high income earners that are making $150,000, $190,000 a year, and they don't have any savings. They do not have any investments. And what they have is just high debt utilization, which
Right.
goes down to basically, even if we really want to kind of get really into it, goes down into the education part of credit. It goes into the education part of financial literacy. And again, going back to school And I think the school systems are actually starting to implement a lot of this stuff here in middle school and
Right.
in high school is financial literacy, is the importance of credit. One of my first books I ever remember reading was The Wealthy Barber. And The Wealthy Barber says, the first person you pay is yourself before anybody else.
Yeah.
And the minimum amount you're going to pay yourself is 10%.
Yeah.
So at the end of the day, again, what's going to hold people back from saying, hey, I can only rent? I know it makes sense to buy because, my mortgage is probably going to be the same or less than my rent, but I don't have a down payment,
It's crazy.
right? Or I have too much debt because I'm buying all these toys, or I'm trying to live and buy happiness for short term.
Right. That's it. Right. Yeah. It's short-term
So,
thinking.
so yeah, it is crazy to me. Well, it's not crazy. It's actually refreshing to see that rents are actually um, higher than a mortgage payment in many municipalities.
Yeah.
Um, and it's exciting to kind of share that with people that are taking a look to purchase things and say, hey, do you realize that your mortgage is going to be $2,200 and your rent is actually $3,100? Maybe you need to kind of shed the light on purchasing versus renting. Because again, a lot of people just don't know because once we get comfortable and
Right.
once we get into a routine, Alistair, as you know, we just continue on what we're doing, and we may not know. So this is a great message to send.
Yeah, that's what I was thinking. We're not talking about this enough. And it just real and it really, I will be honest, I wasn't talking about this enough, right? Because I didn't really realize it until I was working with those clients because we get into this thing where we talk all the time that rates are going down. I know rates have gone down, right? But it's been so long since I've equated the cost, where the rates, what the cost of rates. We've been, what the rate payment was. We've been talking so much more about affordability that I haven't been looking at what that dollar amount is versus what a rent dollar amount is. I've been focusing on what's your affordability dollar.
Yeah, as far as the purchase goes, right?
Right, as far as the purchase goes. Yeah, yeah. Yeah, so I think this again, yeah, like I said, it's just something that I think we need to pound in people more is that, hey, we got to set your financial future straight now. We can get you into this position of being worth $440,000 instead of $40,000 and make
I,
sure that you're worth 1.4 million and not 11,900.
I think as real estate investors, it's becoming a little bit more difficult as far as getting a good return on your investments than it was before.
Yeah.
But as a primary residence, to me, it's the biggest piggy bank of your life.
That's what I'm saying. And with all of the influx of condos that have hit the market, this is what I'm saying. This is where I'm saying now it is the perfect time to buy. There is such an influx. We have an overabundance of condos on the market, entirely too many,
Yeah.
right? And so those are the perfect vehicles to get into the market and become worth $440,000 versus 44.
My son just had the opportunity of acquiring a property. And again, the mindset was just like, well, I'm just going to rent. Why do I need to buy something? Or why do I want this? And I had to break it down to him about appreciation of a property, even if it's 4% over the next 5 years, and what that means as far as the equity growth. I had to break it down to him to say, yeah, right now you're living with your mother and life's good. You're paying $500 a month for rent. So yeah, a mortgage payment of 2,000 plus isn't very sexy, but also it isn't necessarily a reality because if you were to go into the real world,
World,
what
right?
would your true rent payment be, right?
Exactly.
And again, the one thing that I really love about my youngest boy right now, Tate, going to give him a big shout out because he's now listening to our pods as well, is that he's starting to listen to the old man.
Love it.
Starting to realize that the old guy actually is a lot smarter than what he once thought. And more importantly, he's actually digesting what's being said to him
Yeah.
rather than just being like a Teflon pan and what you say just rolls off with absolutely no meaning.
Right.
So I'm really encouraged with youth these days, and I'm even more encouraged once they start putting these these programs in the education system about financial literacy, because it's one thing that our education has really missed is really teaching financial literacy to people. Like, again, Alistair, like, how old are you? You're 40,
48.
48. Like, again, you learned your financial literacy not through your education,
Absolutely not. It came once I got into university. And that
right?
is, and I have always said that is the biggest disconnect that the education system has. It's both in financial literacy and politics. It's
Yeah,
the
and
two things that we don't teach that we should be.
well, and this is a good segue about what we're going to talk about is about bankruptcies, because again, I'm not going to pick on Kitimat, but why not? Let's pick on Kitimat. You have an industry town that's making a boatload of money for the people that are in it, but they have, I'm not saying everybody, but there's an inability to save.
Yeah.
There is the ability to buy short-term happiness. I'm going to buy a quad. I'm going to buy a
A
truck.
sled.
I'm
Yeah.
going to go buy a sled. I'm going to buy a motorcycle. I'm going to go buy a boat. You know why? Because I can, and I
Yeah.
can afford it, and I can finance it because my T4 is saying that I'm making $175,000 a year.
Right.
Why not? Why wouldn't I? But again, as we know, industry towns, if they drop, they drop really quick.
They
What
drop hard.
what's going to happen to those toys? Now
Exactly.
that your income has drastically changed, what is going to happen to those debts? And the reality of it is, and even if things are going well, you have trained yourself and everybody in your family unit that, hey, when I make money, I'm going to spend money and I'm going to live, again, paycheck to paycheck. I don't care if you're making $10,000 a month or if you're making $2,500 a month. The reality of it is the majority of us are living paycheck to paycheck to paycheck, and we are not saving any of that for reinvestment.
Exactly. It's crazy. Yeah.
So what happens? There's people that will go into bankruptcy because they can't afford their debts anymore. There are
Right.
people that are going into consumer proposals because now they need to negotiate what they owe and basically pay a portion of it. And now what happens once you go through that? How am I going to go and get a mortgage? So that's something that I wanted to talk about today.
Yeah, I think it's important. I think it's important because a lot of times, like, and it is bad. Like I've never been through it myself, but I know it's bad. But a lot of people feel you can't recover, that it is something that is the end of life almost. It feels that way. Even the word bankrupt, it's bankrupt. You're bankrupt. It makes you feel like, oh my God, my life is over. My financial life is done. Right. So I think it's important for people to learn that there still is light at the end of the tunnel. So let's go, man. Kick it.
Well, and also important to understand that not lots, but people go through bankruptcies and they rebound really nicely from them.
Walt Disney went bankrupt, what, 7 times?
Who, sorry?
Walt Disney went bankrupt 7 times. I believe it was.
Donald Trump has been bankrupt at least three that I can remember,
Yeah,
right?
it's, yeah, yeah.
And probably the fourth time when he bankrupts the American
In
economy.
the United States,
Probably won't get
exactly.
into that.
Yeah.
But at the end of the day, bankruptcy isn't the end for people. At
Yeah.
times it can be a new beginning. And I have actually a realtor friend of mine um, was actually going to go through a bankruptcy and well, actually went through a bankruptcy, had to go through the whole process of it, but has gone through it and has gotten back on his feet, and 10 years later is just doing extraordinarily well,
Right.
right?
Yeah.
So understand that bankruptcy isn't the end. It can be a new beginning. Understand that, you or your family or your friend or your colleague is not the only one that is having financial problems and having to choose a bankruptcy. And understand that thousands of Canadians who have gone through bankruptcy do buy homes every year. It's just a matter of how you go about to do it.
So as I say, what are some of the ways you go about?
Yeah, well, here's the thing. When people go through bankruptcies, understand that if you currently own a home, your home doesn't have to be part of that bankruptcy. In fact, a lot of times people that are going through bankruptcies, it's going to be all their unsecured debt, all their consumer debt, and the
Right.
only debt that they have remaining is actually their home. It's the one thing that typically doesn't go through a bankruptcy process. Not all the time, but I'm going to say a large majority of the time. So once people go through a bankruptcy, you have to get discharged from that bankruptcy. Okay. And remember, once you get discharged from that bankruptcy, your bankruptcy is going to stay on your credit report for, I believe it's 7 years, maybe
Okay.
6, right? It's going to be on there for a significant amount of time. So the one thing that people need to understand that are going through a bankruptcy, and I'm actually going to even throw a consumer proposal in there, is that once you're discharged from it or once it's paid, you have to reestablish new credit after you have been discharged. And it goes back to that 222 rule. Remember,
I
we
was gonna
talked
say, does that
about
fall into that? That's what I was gonna ask. Yeah.
and again, remember your credit score is a report card of your ability to pay back debt. So when you are going through a bankruptcy or a consumer proposal, again, if that's your report card, what is that telling? What is that telling lenders as far as about your ability to pay back debt? It's not
You're
it's
not that great at it.
we're not going to lend to you because your report card tells us that you have a high F,
Yeah,
right?
you got some problems, pal.
You got some problems. But that being said, this is where you have to reestablish your credit. And it comes to, again, understanding that you have to reestablish the credit after you've been discharged. Because even when you go through a bankruptcy, even when you go through a consumer proposal, there could be parts of debt that you haven't claimed in that process, be it a car, right? Be it a home, be it be it a loan of some sort. So there is some old debt that may have remained that you've continued to pay, but that credit no longer is basically recognized if you've been in a bankruptcy or in a consumer proposal and you've been discharged. So the most important part is if you've ever gone through one of those two, you have to reestablish your credit with two forms of new debt
Right.
that have been reporting on your bureau for 2 years. So again, quite often, if you're talking about a bank or a credit union, you have to wait 2 years after your bankruptcy or your consumer proposal to get a mortgage. But some lenders, that bankruptcy just has to be completely dropped off of your credit bureau. So that could be six years.
Right.
Okay, maybe it's 7. I got to confirm, but a long time. Um, and then you have to basically come in and reapply for a mortgage. So it could be a 2-year process for someone to regain a mortgage after a bankruptcy or a consumer proposal, just purely because you have to reestablish your credit card or your credit score, which is your report card to the lenders.
So there goes to a question that I have. So if you have to declare bankruptcy, do you not then have to like hand in your credit cards?
Yeah, well, it depends on what's all part of that bankruptcy,
Right.
right? So if your credit cards, let's just assume all your consumer debt is part of it, your unsecured line of credit, your credit cards, your car loan, maybe
Right.
you have a consolidation loan in there. Um, but the only debt that remained was your house. You didn't want your house to be part of that bankruptcy.
Right. But no, what I was going to say, going to the credit card was normally if you had to hand those
Yeah,
in that 222, you always want to keep your longest form of credit card,
yeah.
right?
You won't though. So this is where the important thing is even if you kept your longest form of credit, remember you have to show 2 years of reestablished credit
Yeah,
2 years
right.
after the fact. The question which I was getting to is like who's going to give you a credit card
That's
after
what I was going
you've
to
gone
say.
through the
How are you
consumer
going to get one? Yeah,
program? Right. So there's these things called secured credit cards. Now,
right.
secured credit card, Alistair, let's just throw you and say, you've gone through a bankruptcy. You've now been discharged. You now understand that you have to reestablish your credit because, again, you at one point or at some point you want to get into another home. So now you got to go in and you're like, geez, I remember this pod. Remember these two bald guys talking about a 2-2-2 rule. I think what that meant was I need to reestablish two forms of debt. I need to get a limit of 2 years. And I think what they said, they need to be paid on time every time for a 2 year time frame. So yeah, that's that 2-2-2 rule that these guys were talking about. So how am I going to get a secured credit card? So the important thing is you got to go get a secured credit card. And what that means is usually they start at $500.
Okay. I was
And
going
then
to ask, are those one of those ones that you put money on?
those are the ones you put money on. So now you come to your bank, say, Alistair, you say, hey, I would like to get a secured credit card. Your bank is going to say, okay, give me $500. You give them that $500. They give you a secured credit card with a limit of $500. So again, if you go sideways again, you have all that money that's already prepaid. But in the
Right.
same time, you're making those payments on time, you're reestablishing your credit, and maybe now 6 or 7 months goes in, now you're going to bump it up to 1,000. Now they're going to say, Alistair, I need another $500 because I did $1,000 on your secured credit card. And you continue to go on and you continue to have great repayment history. And now all of a sudden you go back in a year and a half and you say, and they come to you and say, you know what, you have proven to us that you can carry credit with this secured credit card. You've had made payments on time every time for a year and a half. We're now going to make this unsecured, going to give you your $1,000 back. And then at that point, Alistair, you can say, hey, thanks for having an unsecured. Now I have a limit. Can we bump that up to 2,000? And they may come back and say, well, let's
Let's
take
not go
it a little
crazy.
bit. See how you handle this for the next 3 or 4 months and then come back. So where I'm going with this is that any secured credit card that you get, you want to make sure that it can revolve into an unsecured credit card because again, it's all going to count towards your 2 year history.
Right.
Right? There are some secured credit cards that might not allow you to go into an unsecured credit card, and now you have to start all over again. Right?
Yeah.
So again, it's really important that when you go and do a secured credit card or you're reestablishing your debt, that it is going to basically go into an unsecured credit card and you're going to be able to, again, use that history moving forward and reestablishing that 2 year credit history.
That's cool.
So yeah, so again, what I'm trying to say in 3 sentences or less is if you are once you've been discharged from a consumer proposal, once you've been discharged from a bankruptcy, the first thing you need to do is to reestablish new credit, not old credit, but new credit. And it comes down to getting two types of debt that are going to report on your credit bureau for 2 years and that you're making payments on it every time, all the time for 2 years. And it has limits of no less than $2,000, which you might have to grow into.
Yeah. Yeah. I think that, sorry, I don't want to interrupt. I just wanted to say, I think that this is something that people need to understand how important a lender is. They're not just somebody that tells you what your mortgage payment is.
Right.
Right? These are people that are going to help you understand processes like Geoff just has laid out so far. Like if your lender can't do this stuff, you're not working with the right person. Anybody can tell you what your mortgage payment is going to be. That's get out of bed stuff. I found out the $22,732 or $32 mortgage payment for a Langley for a Langley 2 bedroom 2 bathroom by myself. Right? So like this kind of stuff that Geoff is doing right now. I just wanted to say how important it is and how if your lender isn't doing this kind of stuff for you, this is why you need to be speaking to people like Geoff. Sorry, Geoff, I know I was interrupting, but go ahead.
Well, thank you for the plug. And you're absolutely right. I always say this is what separates the cream, right? And even with these folks that I was working up with Kitimat, they were business for self, newly business for self, 1 year. So again, they don't have the reporting income. to work with a bank or a credit union. They don't have the stated income to work with the bank or the credit union. In fact, they didn't have the credit score. So now we had to go to a subprime lender, right?
Right.
And again, now we're dealing with Kitimat. Now we're dealing with a newly business for self. Like there's a whole bunch of hair even deeper within that file. And at the end of the day, unfortunately, we couldn't get it done. But what we left them was a game plan on how to get it done.
Right.
And that game plan was like, hey, look, we went to the banks and credit unions. Everybody said no. We went to all the B lenders. Everyone said no but two. And basically, the two that was remaining, one didn't like that you weren't in business for self for 2 years, and the other one didn't like what didn't they do? They didn't like that the down payment was coming strictly from the business account. So this is what we need to do: is we need to basically work again for another 12 months in your business, and again, then we can come back to these folks. And in the meantime, with your down payment for this one lender, let's start basically making sure that that's going into your personal account versus your business account. So when that time comes, your down payment is coming from your own resources, not your corporate resources, right?
Which will
And
again make it attractive.
and for the other lender, they need 2 years. Right now, we have 1 year. So again, by the time 12 months rolls around, so next June, we're going to be in a much better position to move forward. So it's not just telling someone that they can't do something, it's giving them a game plan on how to do it and how to get there. It's like that Google roadmap scenario that I always give.
Right. And so thank you again. Like that is again, if your lender is not doing so, if you're not walking away with the game plan, I've said this too with realtors. If you are not walking away from your trusted partner, your realtor, your lender, with a game plan for whatever you're trying to do, even if the answer was no, we couldn't find the house you were looking, the property you were looking for, you got turned down for lending. If there is no game plan from the two people that you guys have been working with, then you've been working with the wrong people, because the right people will have set you up with a game plan for success.
Right.
Right.
Well, and here's another thing, because I know there's going to be some people that do have credit challenges that are listening to this. And we might have people that maybe they were in a mortgage and now maybe they're going through a bankruptcy.
Right.
Right? And now they're worried that their mortgage is coming up for renewal. Is like, okay, well, I'm in my bankruptcy. What's going to happen to my mortgage? Am I going to have to sell my place? Like it's a freaky kind of situation.
Right.
But here, as of today, if anyone is in a bankruptcy and you have a mortgage that's coming up for renewal, as long as you've been making your payments on time every time, as of today, it's simply sign in your renewal documents and away you go. So your bankruptcy or your consumer proposal is not going to affect the mortgage that you're in, providing that you've been making payments on time every time.
There you go. And that's one thing you've said, as Canadians, we're pretty good at making our payments.
We are. And again, when you take a look at what kind of debt is being claimed in a bankruptcy, it's every debt but your house.
There you go, right?
So when you take a so again, the one thing about Canadians is we do pay our mortgage. The one thing about Canadians is that we have one of the lowest foreclosure rates in the world. And again, if you do go through a bankruptcy and you do need to get a mortgage, it can just understand that it could take up to 2 years in order for you to do that with a bank or a credit union, right?
Right.
With B lenders or private lenders, like a B lender, pretty much can do it the day after you're discharged, right?
Yeah.
So again, a no with a bank or a credit union, if you have the ability with down payment, may be a yes with a B lender or a private lender.
Yeah. Yeah. But like I said, the most important thing is make sure you're working with somebody that provides you with all of those options and an understanding of what all of those options are going to look like, so that when you're going to make your decision, you know what you're choosing, right? Because you have to understand, if you're going with B lender, that you're going to be paying a higher rate, right? No, don't go thinking that, oh no, I'll just go with a B lender and I'll get the same rate, right? You got to understand that there's going to be
Well, you're
like,
gonna have to come up with a bigger down payment.
Yep. Yeah.
Your interest rate's gonna be 1 to 3% higher than a bank's, and you're going to have lender fees on top of that. If you think, well, I'll just go with a private, oh, now you need, again, a bigger down payment. Your rate is going to probably be up to 4 to 5% higher than a bank's, and your fees are going to be up to 4% of the loan amount. So yes, can you do it if you have the down payment? Absolutely. Is it going to be the most
Comfortable?
comfortable, or is it going to be the best rates and the best terms? Absolutely not. So again, when it comes down to financing and borrowing money, guys, credit score is as equally as important as your income. I have said this countless times. You can make $1 million and have poor credit, and a bank or a credit union is not going to take a look at you.
Exactly.
Likewise, you can have the best credit in the world and only be making $30,000 a year. Doesn't mean you're going to be able to get qualified for $1 million home.
Yeah.
Right?
We said it earlier with that person that runs the place down south below us there. That dude had to go to Russia to get to Russian banks to get money. He wasn't getting any money out of US banks anymore because he had gone bankrupt so many times.
And yeah, this is Walt Disney.
No, I'm talking about Trump.
Oh, okay. Sorry, I'm like, oh, Walt Disney.
No, the guy running down south, that he had to go to Russian banks to get money because the US banks weren't lending him money anymore.
Yeah, yeah.
Right, and he was rich.
Creativity.
Right? So there you go.
Creativity.
Right.
So this is what I want to leave, because a lot of people were going to say, well, how much do I need to come up with a down payment?
Yeah.
So here's the thing. Let's assume everything is great. You've reestablished your credit. You got 2 forms of debt. The limits of them are $2,000. You've made payments on time every time. Now you have to go. Now we're ready to come back to a bank or a credit union. How much do you need to put down? In theory, it's 5%. In an unwritten rule, a lot of lenders will want 10%, right? So again, 5 to 10% with a bank or a credit union. Again, if you want to get into it earlier, and the banks and credit unions are saying no, a B lender or a private lender is going to be a minimum of 20% plus. But do keep in mind, you now are not getting your sharpest rates. With a B lender, your rates are going to be anywhere from, I'm going to say, 1 to 3% higher. With a private lender, your rates are going to be 4 to 5% higher, and your fees are going to be anywhere with a B lender from 1 to 1.5%, and with a private lender, it could be anywhere from 2 to 4%, right? So again, reestablish your credit, folks. Make sure we get you back to a bank or a credit union. It can take you up to 2 years. If you say, hey, I don't got 2 years, but I have the down payment and I'm willing to pay a premium on rates and fees, then we can have an answer for you for the day after.
That's awesome, man.
And that's it. That's what we got.
That's wicked, man. That was a lot today.
I didn't think it was going to be a lot, but it turned out to a great conversation.
Yeah, it really did. We got some good stuff on bankruptcy. We learned that now is really the right time to buy with rents and mortgages being essentially flat, right? Like now is the time, people, to just get out and start boogieing. Look and get your financial future started. Whether you're a first-time buyer, whether you're somebody that's coming out of a bankruptcy, man, you can establish your future again. That's actually the craziest thing. You know what? Both parties, one that's that's just getting their financial future started, another party that might have thought that their financial future was ended, right? Both are now in good positions to get back into the game and be worth $1.4 million when they're 65 versus $11,900. Please, people, don't be poor. Yeah. Don't be poor. But that's it, people. We want to thank you for sitting and listening to us today. As always, continue to love us, like us, share us, tell everybody about us. Give us your comments. Anything you guys anything you guys want us to talk about. Man, that was really hard to get all out at once. But anything you guys want us to talk about, reach out. Let us know. We love to make sure you guys are getting all of the content you guys need to make sure that any of your decisions in the future are solid. But most importantly, guys, get out there now that the kids are done. Enjoy the summer. Be back here with us next week. And most importantly, stay empowered, stay informed, and Jeff,
Stay tuned.
that's right, baby. Stay tuned. Peace out.